Welcome back to Tokenized. I'm Simon Taylor. I'm here at the Avalanche Summit, and I'm talking to Farooq Malik, who is co-founder of Rain. How you doing, Farooq?
I'm doing well. Thank you for having me.
Thank you for being with us. Tell me a little bit more about you, and tell me a little bit more about Rain.
Yeah, so I'm Farooq. I'm one of the co-founders here at Rain. My background is mostly traditional financial services. I was in international banking for several years. And prior to that, I was in private equity focused on frontier and emerging markets. And at Rain, we have been building a lot of the financial tooling to service a global customer base. I think what we realized when we started Rain was that the last several decades have been punctuated by the success of global platforms like Airbnb, Facebook Marketplace, Amazon, and other large global companies that are servicing people around the world, right? Both businesses and consumers. And what we realized is that they didn't really have financial partners or enablement partners to provide financial products around their global customer base. And so that's where we started realizing that there was an opportunity to build a global enablement player and start providing kind of fintech associated services to large global platforms and communities that have a broader customer base. And we realized that stablecoins and stablecoin infrastructure was really the best way to provide that utility for dollar balances and digital dollars and digital dollar utility.
I want to go into stablecoins because what is it that's driven this moment in time? Like, why have they become so hot at this moment, do you think?
Well, I think it's just a waking up of the collective conscious, right? I think one of the things that we've realized is so 75% of dollars live outside the US, right? And every major fintech that's been created over time, over the certainly more recent time, has been focused on that 25% market segment, which is domestic. And stablecoins have become a new way, right? Over the last several years since Tether and Circle started this industry to be a way for providing dollar utility and dollar savings and dollar access to people around the world, right? Outside of their traditional kind of Euro banking partnerships. And so that's where I think we've seen a lot of demand coming, where people have woken up and said, hey, USDC or USDT or other stable coins are a way to hold dollars without having to go open an account at Deutsche Bank. Right? and that's really where I think that people have started realizing, hey, this is now a way to provide access to these services and a way for me to hold savings in dollars and potentially earn yield in dollars and things like that. And that's where stablecoins, I think, have really started taking off, where just that collective consciousness, people wake up and then all of a sudden it just happens, right? It's like Garfield.
What a perfect metaphor. And what do you think has happened to sort of make this convergence of TradFi and DeFi happen? Because you work with a lot of partners that are more on the TradFi side to deliver what you deliver, but you're using arguably DeFi rails to do it. What's unlocked that?
Yeah, I mean, look, I think our thesis when we started Rain was pretty simple, right? Which is that digital money is going to be a thing, whether we like it or not. Whether central banks around the world like it or not, it's already a thing. It's already, at the time it was over, it was almost $100 billion industry when we started the company. And that's much larger than many nation states, right? Economies. And so we realized that it was going to be a thing because it was already a thing, right? It was no big smart idea on our side. It was just that we realized that this is something that's inevitable and people are using it like money and they expect it to behave like money. And so TradFi and DeFi, I think the convergence is happening largely because people are realizing that, hey, people that hold these tokens as money expect it to behave like money. And so a lot of the underlying infrastructure that we built Rain on top of has been focused on what does a post-regulatory clarity world look like? And how do we start front-running some of these use cases and building that utility and that infrastructure so that as regulatory clarity comes in, as larger institutions want to participate, how do we give them access to the same type of infrastructure and tooling and certifications and security certifications, et cetera, that they expect to have from other software vendors, right? And so with Rain, we spent a lot of time working on the credit side, right? Because private credit is an industry. Private creditors are not banks. they've been largely flexible when it comes to transacting in stablecoin infrastructure and in the DeFi ecosystem anyways. And so we started borrowing a lot of money on the blockchain to support our credit card programs. And we actually started tokenizing all of our credit card receivables. And each transaction that happens on the Visa card that we issue that's a credit product, we actually borrow that correspondent settlement money from a lender.
Wow, I did not know that. Sorry, just unpack that for me, the flow of funds, please.
Yeah, I mean, so maybe it's better to kind of give you an idea of how traditional programs work.
Yes,
right?
please, and compare the two.
Yeah, so in a traditional program, you'd have like a warehouse lender, right?
Yeah.
Warehouse lenders typically will be there to buy the receivables after the transaction's been originated. And you need to kind of consolidate X number of dollars of transactions, and then you have to fill out a bunch of paperwork and put in an Excel spreadsheet and then mail it off to your banking, your lending partner, and then they'll review it, and then they'll say, oh, this is $251,000, and that fits within our limit, and okay, here's $251,000 of warehouse advance. But generally, there's like a 2-week lag between when that transaction happens and when you get your money back. And so working capital wise, it's quite inefficient because as the program scales, like that activity in that 2-week period will also scale, right? And so what we've done is that we've started being able to tokenize the transactions on the receivable at a per swipe basis. So we can actually turn around and let's say I spend $10 at for a cup of coffee or breakfast. I guess a cup of coffees are $10 these days. Yeah. But we turn around and we can actually borrow that money from our capital partners and then settle that money with Visa entirely on the blockchain.
So that is disruptive for anybody operating a credit card program, really, and really much more meaningfully efficient. And I think that sort of really speaks to why institutions might come into this, because they want efficiency just as much as anybody. How have your conversations been with those larger institutions? Because you said, a lot of them are waiting on the sidelines for regulatory clarity, but what are you hearing from some of the banks, domestically, internationally, and some of the other players in the ecosystem?
Yeah, I mean, we're starting to see a lot of inbound from both traditional financial players as well as just banks around the world that are interested in using stablecoins as a way to improve efficiencies in their settlement stack, right? On the private credit side, we've also seen a lot of inbound on folks that are trying to learn more about how do we actually facilitate this activity, because not only is the borrowing entirely on the blockchain and using stablecoins with Rain-powered programs, but all of our repayments from clients are actually all on the blockchain. So nobody's taking any fiat repayment risk. So the lenders actually get repaid automatically when our clients repay us. And that way you kind of close the loop on borrowing.
Yeah, because it just goes straight through.
It just goes straight through.
It's just do. Yeah.
Exactly. And then it automatically goes to the smart contract. Interest is taken out, principal is taken out, and we get the money at the bottom end. So it's a lot more efficient. And then the other thing which was interesting, right, is when we actually had 2 offers from capital partners early on. And one of them was a traditional sort of credit fund, and the other one was more was open-minded about lending money to us on the blockchain. And just in the legal documentary cost of doing it in the TradFi space versus the DeFi space, we actually saved probably about $180,000 in just legal documentary costs, because we didn't need to put all these covenants in on repayment, and our accounts need to be controlled by the lender. We need to be able to give them account access. Because all of the repayments,
does that.
Exactly. And all the repayments are forced to go through the repayment flow.
You have no choice. Cryptography is ensuring that has to happen. Yeah. You have no choice.
And we need the lender's consent to be able to change where repayments go.
Yeah. It's incredible when you unpack the real world use case. I think it really starts to speak to what you've built in kind of a different way, but speak to the consumer side as well. Like, we've seen crypto linked cards for a little while, but Kai Sheffield says that the world now calls these dollar cards. People just want access to dollar cards. What are you seeing, and where are you seeing that product market fit the most?
I think Kai is totally right. Right? Like, I think people want dollars. I think increasingly people are realizing that accessing dollars through banking as a service channels at regional banks is probably not a sustainable long-term model. And stablecoins as a global sort of dollar correspondent mechanism provides the functionality of a dollar balance, the utility of a dollar balance now when you add it to the Visa network and other card networks. And then the utility of dollars, because you can hold it, you can earn revenue on it, and you can spend it, right? Like that's the same thing that people expect all of their money to do, right? Is you can earn it, you can hold it, you can save it, and you can spend it.
But that's not true for everybody everywhere around the world with their local currency. So
Exactly. Yeah. And that's where we've started seeing like a tremendous amount of market adoption, right? Where you have people that are earning money from more developed economies, right? The US, Europe, et cetera. Those monies are flowing in the form of salaries or remittances or vendor payments around the world. And the recipient is having to receive them into a local currency, which may have sort of high inflation. But beyond that, it may also have high fees, right? Like all the banks in those markets, generally these economies are fairly small. Banking is not very competitive. Banks charge high fees. And so not only are you paying a fee on the way in from the US back into, country X, you're also paying fees on the way out. So if you're receiving money from a vendor, right? Let's say you're a dev shop, right? You're receiving funds from me that I'm paying you. And then on top of that, you're turning around and you're paying for Adobe or Google Cloud or AWS or Microsoft Teams. All of those transactions are now being upcharged to you by your local bank when you're going back to dollars, right? Because the US dollar is still very much the currency of global commerce.
Since we are at the Avalanche Summit, Farooq, why don't you tell me about the Avalanche card?
Yeah, I mean, we had an opportunity to work with the Avalanche Foundation on building a truly unique product. As you know, like Avalanche is a global sort of blockchain, global customer adoption. And we wanted to work with the Avalanche team to provide a product where, a large swath of their global customer base could access it. And the Avalanche card is a self-custodial product. It's the user's wallet. It's attached to a Visa credential that you can use anywhere that Visa is accepted globally. And all the funds on there are fully in the user's custody at all times. And you can spend USDC or USDT or AVAX or wrapped AVAX. And we've seen a lot of success among the community. I think that, even while I was waiting in line to come in, several people turned around and said, "Hey, are you from Rain?" And they showed me their, virtual card on their phone. And then, some of the folks even had our tokenized cards, which light up as you bring it closer to an NFC, which has been pretty cool.
Oh, nice. Nice little detail. Any NFC nerdery is fine with me. So tell me what's next for you and what's next for Rain. Where are you guys headed?
Yeah, I mean, look, our goal is, pretty straightforward, right? Is customers expect to be able to service their global customer base. I think that, we benefit from our partnership with Visa because Visa is a global payment platform and a global payment network. And so our ambition really is to continue getting additional licensing in additional markets so that we can continue expanding the global footprint that is available for our customer base, right? We want to make sure that stablecoins and stablecoin-backed infrastructure, as that expands globally, as demand expands globally, and as our licensing footprint expands globally, we're able to just continue servicing clients with a single API, right? So you connect once, you sign one commercial agreement, and you go where we go.
Well, thank you so much, Farooq. Where can people find out more about you and more about Rain?
Yeah, you can find out more about Rain at rain.xyz. And I think you can, check out my Twitter where I don't post that much. But
Definitely do. All right. Thank you so much.
Thank you.